Hello everybody, it's Yashar here, back again with another video. And in this video, I will quickly go over the recent email that I received from Wealthsimple about withholding taxes upon selling my stock inside my TFSA. And a quick search in Reddit shows that lots of other users, other Canadian investors receive similar emails regarding some of the Canadian stocks which are registered as publicly traded partnerships like Brookfield Infrastructure Partners and Granite REIT. This is the email I received. Hi Yashar, heads up, as of January 1st, 2023, when Canadian residents sell certain type of securities, publicly traded partnerships, the Internal Revenue Services IRS requires a 10% withholding tax to be applied. You're getting this email because you own shares of Granite Real Estate Investment Trust in your Wealthsimple Trade TFSA account that might be subject to this new 10% US withholding tax. Because this is a new regulation, we don't yet have the complete list of securities that will be affected. Generally, the affected securities are classified as partnerships for US tax purposes. Such securities can include securities generally referred to master limited partnerships, publicly traded partnerships, and exchange-traded funds. That said, based on the information we currently have, we have identified securities that we believe the new 10% tax will apply to. And starting on January 1st, 2023, the sale of these assets may be subject to new withholding tax. For example, if you sell an affected security for $100, $10 will be withheld. This is huge, right? 10% of the sale price. Please note that this email is for information purposes and shouldn't be considered legal or financial advice. So, yeah, you get the idea. It was a weird email. Granite is a Canadian company listed on TSX and they have business all over the world, in Canada, in US, and in Europe. And my shares are inside my TFSA tax-free saving account. This email indicates that the 10% withholding tax is not on capital gains, but actually is on the sale price, which sounds insane. Who wants to own a company and lose 10% of the sale value to withholding tax? And why IRS should want 10% tax cut from a Canadian company listed on TSX who has international business? Anyway, I started to dig around and realized that first, Wealthsimple does not say that they will deduct 10%. They actually mentioned they may deduct this withholding tax if the company actually falls under this law. So basically, they sent this email to everyone who owns a partnership stock to cover their bases from lawsuits in the future. Next, the new rule is about publicly traded partnerships or PTPs. And this is the definition of a PTP according to IRS. They should have connected taxable income from US, and I will talk about this connected part a bit later. But more importantly, they have to withhold 37% of the distributions for non-corporate partners. So if you own a stock that has a 37% withholding tax on distributions or dividends, this company is probably a PTP which has a connected taxable income in US, and they should withhold taxes according to IRS definition. With Granite, we definitely don't have 37% withholding tax on the distributions. So Granite doesn't seem to be PTP with connected income. So effectively connected income or ECI is when a foreign person engages in a trade or business inside US and they have to withhold taxes on the income generated from these activities. But it is mentioned here that whether the activities of the partnership considered to be ECI or not depends on the nature of the partnership activities. Next, I looked at the Granite website and I realized that they actually have a section related to this, which they called it monthly qualified notice. They clearly mentioned here, Granite REIT does not expect non-US investors to be subject to US tax withholding under IRC section 1446F on the disposition of their units. Granite REIT has not been and does not expect to be engaged in a US trade or business within the meaning of this law, which they mentioned here. Granite REIT intends to issue qualified notices according to this law. Okay. And if we look at this notice, we can see that they check the box here to indicate the transfer identified to indicate that this the transfer is eligible for an exemption from withholding taxes under 1446F. And the reason for this exemption is that the partnership was not engaged in a trade or business within the United States at any time during the taxable year of the partnership through the PTP designated date. To confirm this, to basically make sure about all this, I also sent an email last night to Investor Relations of Granite REIT to Andrea Sanelli and asked, "Dear Andrea, I hope everything is going well with you. I am one of the shareholders of Granite, TSX Leaks stock, and I'm a Canadian citizen. I have a quick question about the new email I received from my brokerage about the potential withholding tax upon the sale of Granite shares in 2023 and beyond. Can you clarify whether or not Granite will be subjected to this new withholding tax? This is a question for many Canadian investors in your company." And then I copy-paste the Wealthsimple email. And she responded today and mentioned that Granite does not have any effectively connected income or ECI in US. And that's exactly what we were looking for, to make sure that Granite does not have ECI in US. It is a PTP, but it doesn't have effectively connected income in US. So if we sell the shares, we are not basically required, the brokerage does not require to withhold tax on our basically selling these securities. She also clearly mentioned this. This should satisfy the requirements that withholding taxes should not be required on the transfer of stapled units of Granite Real Estate Investment Trust when they are sold by investors. So basically no worries about withholding tax if you are a Granite REIT shareholder in Canada or I think internationally. I think the same rules can be applied to Brookfield partnerships. And they should not be subject to withholding tax either. But always double check with investor relations of the company that you own. There you are, guys. I hope you enjoyed this video. And if you enjoyed this video, consider subscribing to the channel to see similar videos. Thank you for watching, and I hope to see you guys in the next video. Farewell.